it's hard to explain exactly how important the accounting ledgers are for everything that transpires, not just on an economic basis, but on a global basis, on a data and information basis. Because through the history of humanity, the records get changed by those in control of the records. Whoever controls the records, they change the records. And if you don't have the ability to audit those records stand forever, and that becomes the new truth. And so you end up with this system. And sometimes I call it the operating system of the world. The world has to run on something. Everything in the world has to be recorded on a ledger or it doesn't exist. That includes the money you have in a bank. That includes the title to your house or your automobile. That includes the items that are in the supermarket. There's no way for the people that are running businesses, corporations, the government, banks, you to really have a record of everything that you have or own. And so the ledgers are massively important, and the ledgers have been corruptible since the beginning of ledger keeping, which would be tens of thousands of years ago. And so if you look back on the history of accounting in the world, which are the ledgers that run everything. Without the ledgers, right, as I just said, you have nothing. And so the history of ledgers is really, really simple. Shockingly so. You would think something that runs the entirety of the world would have much more complication, but it doesn't. There's only been 2 innovations before Bitcoin on ledger technology globally. 10,000 years ago, Saif went to a market, with me, and we went to a market, we bought 5 sheep. And Saif got a clay tablet, and he wrote down on his clay tablet, I have 5 sheep. And then Saif went home and sold 2 sheep and bought 5 more sheep. And at the end of 18 months, Saif could look at his ledger and know how many sheep he has. That ledger is the birth of single entry accounting. Saif knows how many sheep he has that he bought at the market in 18 months, in 24 months, in 36 months. I do too, because I'm keeping a record also. And that's how humans kept records for tens of thousands of years up until the 13 or 1400s, when somebody decided to innovate that. A lot of people take credit for who innovated accounting to double entry accounting, but accounting was innovated in the 13 or 1400s to double entry. Instead of I have 5 sheep and I mark it on a clay tablet and I bake it in the sun so other humans can't change the records, I now record a second input. I have 5 sheep, I paid $5. And so on this record, on your ledger, you now have a debit and a credit. And then you add those up over some period of time, and you get every single financial record that exists today. If you look at any bank, government, corporation, publicly traded company, all of the information that they report is double entry accounting that was invented in the 13 or 1400s. So we're looking at 700-year-old technology running everything on the planet. Every ledger is using an analog, antiquated technology from the 1400s. And so what's the problem with that? Well, the problem is it's the legacy stakeholders that control the books and records. So whoever controls the books and records, and this is the most important part, they can alter the books and records. So you see what happens as a result of those in charge of the books and records changing the books and records multiple times every decade in massive fraud and devastating fraud events. The fraud that occurs using double entry accounting has been pervasive for the last 700 years, because whoever controls the books and records, they get to change the books and records. And the people that control the books and records, they're pretty smart. And if they commit a fraud, the only way for somebody to figure out if there was a fraud would be to audit the books and records. Well, the auditors, they don't make as much money as the
things they audit.
Yeah, as the guys that are stealing all the money. So the auditors are usually not as smart as the criminals adjusting the books and records. And so it's very hard to find out when people are committing crimes from just auditing the records. because the people committing crimes are pretty smart people. And that's why you see these examples in governments and businesses and banks and all types of industry where the fraud lasts decades. It takes decades to uproot the fraud. And it's usually a result of they finally run out of money. Once they run out of money, everyone's like, oh, wow, this was going on for the last 30 years. And you're like, yeah, it was, because that guy controlled the books and records, which is a really bad technology. And so the question becomes, if accounting runs the world, if ledgers run everything, and everything you do in your life depends on the ledgers being accurate, how come they haven't been upgraded in 700 years? And the answer to that's very unfortunate, in that nobody's incentivized to fix it. They're not incentivized, because no bank or government or corporation wants to change a system that allows them to change everything. They can change anything anytime they want. It's really difficult to find out if they change it. And so we've had double entry accounting as our operating system for the world, and the operating system, the rails that every single business, corporation, and bank runs on. And that's existed for 700 years. And eventually, at some point in time, a group of people or one person decided over multiple years to change that. And I think if you look back at what the Bitcoin network is, it looks like it's lots of very smart people over 40 years creating different important innovations to accounting. And then the pseudonymous Satoshi, and I'm not a computer expert, but if I had to, my macro view is he put together lots of people's work that was very important to the space. And he came up with this proof of work innovation, which allowed transactions to become immutable on a record. So you have a ledger now that becomes immutable. So you have this single entry accounting, single entry journal entry accounting tens of thousands of years ago. You have double entry accounting in the 13 or 1400s. And then in 2008, we have the new innovation, which is double entry accounting. So you have the debits and the credits, and then you have a system self-audit, which is the proof of work innovation. And that system self-audit audits every transaction to its inception. Once the transaction is audited to its inception, it's written, and Satoshi uses the word time chain, which I like better. It's written to the time chain. So there's a time chain of every transaction. There's a chain of time transactions, and then there's a chain of transactions. And once they're written to the time chain, they're immutable. They can never be changed. They can be you can add to them, but you can't go back in time and change any of the past transactions. What that means is, and the proof of work consensus mechanism on how that happens, the important part of it is that it doesn't happen by any stakeholders, which is what the legacy systems were. They were all run by the stakeholders approving the consensus mechanisms. What this used was energy, servers, and nodes. And so the servers and nodes, without human trust risk, were the consensus mechanism for auditing the transactions and then writing them to the time chain, which is the triple entry accounting. So you get the time chain, or people call it the blockchain. The blockchain becomes the triple entry. So you have transaction between two parties, single double entry accounting, written to the blockchain time chain up top. That new input is a triple entry accounting ledger through an immutable proof of work network, which is the only innovation that's happened in accounting in the last 700 years. And so once it's written to that, you have unquestionable truth on chain. There are no ledgers that have ever existed in humanity where the records on the chain are self-audited by the network and 100% trustworthy. You have no human trust risk. So all of a sudden you have this new accounting technology that's 100% accurate. And so what that does is that changes the world. That changes everything. And so 2011, 12, when I started really thinking about this stuff, you really start thinking about what changes if you have an immutable record. And the answer is everything. And the first one that changes that we all talk about the most is money. Money changes. And so you have Bitcoin network, which is capital B, the Bitcoin network, which is this accounting innovation, which are the rails of what the technology is. And then you have Bitcoin, lowercase b, the commodity digital asset that lives on this network. And Bitcoin is the most important and best monetary technology that's ever been invented because it lives on the best accounting technology that's ever been invented. If the Bitcoin lived on a different network that didn't have this proof of work consensus mechanism with the immutable record, it wouldn't be the most important monetary technology ever created. Whatever lived on this Bitcoin network would be. And so because you get them together, Bitcoin is the most important innovation in money in the history of humanity. And now you have the best money and you have the best accounting technology. Well, what else can you do with that? It's endless. And so how much time you spend understanding that this is just a brand new accounting technology that changes how all records on the planet will be kept, and the money that lives on it is the best money that's ever existed. You can't change the books and records. You can't increase the number of them. You have no bearer, you have no counterparty risk. You have no transfer risk. You have no credit risk. The Bitcoins just exist on this network and no one can seize them. No one can confiscate them. The network is independent. And the reason that is the proof of work consensus mechanism, which in order to hack, which is the most important part of the security of the network, you would have to hack all the nodes that contain the entirety of the Bitcoin network, which at the same time, which is impossibility. And that's why no one's been able to hack it. And so when you can't hack this network, not only do you have the first innovation in accounting and the first innovation in monetary importance, when you can't hack the network, what happens? Well, nobody can take your Bitcoins if you have them on your self-custodian wallet because the hackers can't hack it and the government can't hack it. And so nobody can take your Bitcoin on your self-custodian wallet. And the ramifications for that is a whole different discussion in terms of private property, because over 50% of the population on the planet Earth live in autocratic authoritarian regimes. They don't have private property. And another 20 to 30%, according to Alex Gladstein, who I love his statistics, live in double or triple digit inflation economies. So you have somewhere between 80 and 90% of the global population, 7 billion people. They live without private property and in fear that their money will be debased and go to zero. And so if they have a digital asset on a wallet, then they have private property and they have the store of value, which also gives them banking, which is a whole different problem. So I kind of went through that pretty quickly. The innovation is this massively important accounting technology change that eventually all products will live on this. All derivative financial products will live on it because there'll be a better record of it.